I'm going to be explaining inefficient price action, how to use them for present and also future price actions. So in this session, in the previous session, you can recall that this blue region right here was our monthly inefficient price action. You can see that right here, our monthly inefficient price action. And then I was saying in the other session that if I wanted to see that there's to confirm a shift from a monthly inefficient price action, I'm going to be using the 4-hour time frame, which I counted 1, 2, 3. So if you're looking at a weekly inefficient price action, that means you're counting 1, 2, 3. So you're watching to see a 1-hour swing low break. So if this was a weekly inefficient price action, I would want to see a 1-hour swing low break. If this was a daily inefficient price action, I'll be looking to see 1, 2, 3, a 30-minute swing low break. Does that make sense? Now, on the 4-hour time frame, you can see that after we broke this low right here, above right here, you can see we left this first inefficient price action, left the second one, we tapped into the first one the first time, tapped into it again the second time, the third time, and then we saw this displacement to the downside. The market made it seem like this one was invalid, but it isn't, because you can see how after we left this trend line liquidity, price rallied to the upside, wiped out every single person who was trading with the trend line, came right back into this inefficient price action that it intentionally violated right here. Intentionally violated it to make you see it as an invalid point of interest. And you can see how we came back right into it, rejected from it, broke structure on the smaller time frame, came back here, grabbed liquidity, and continued to the downside. You can see that clear as day. On the 4-hour time frame, now recall that this blue area was our monthly inefficient price action, and after we came into it, violated it, made it seem like it's not gonna work, came back here, kind of used it like a support, rallied, failed to create a new high, and then we dropped lower. You can see how we still came back into that monthly inefficient price range for a redistribution. So this tells you that whenever you mark a bigger time frame inefficient price action, you just mark it and leave it there. Even if the market proves to you that it's an invalidated zone, it doesn't mean that the market is not going to come back there. You can see how it came back this one. You can see how it came back into this one again. So I'm going to wrap this up, and in the next session, I'm going to do more explanation.